All right, welcome to the Q1 Lookback for Global WorkTech VC. Thanks for being here. Thanks for being members. I appreciate the support and all of the ongoing input that I receive from everyone. It's really helpful. And over the next quarter or two, you'll see some changes happening if you're a data access member or insights member to the VC database. And then we'll talk at the end, as I reference the tech provider directory, we'll talk about some changes happening and how that will start to appear at WorkTech as well, all based on some feedback from all of you. So thank you for all of that the last couple of quarters, and looking forward to an ongoing relationship here. So let's go ahead and dig in. Tend to have a lot of data and move pretty quickly. Please put your questions in the Q&A, and I'll try to keep an eye on that as we go and answer here. And if I don't get to your question, I'll take it offline. You know how to find me. I know how to find you. All right. So Q1 was, if you saw the report, what I said was quite a year. Q1 was quite a year. 2.7 billion, 91 deals, by far the largest quarter since I've been tracking, the largest quarter since, you'll see, I've got a slide later that goes back just about a decade, certainly the largest there. And I've been in the industry now for 30 years, probably looking at this for 20. And we've never seen a time like this or activity like this. It's staggering. I haven't spoken to anyone that isn't surprised by the level of activity and the confluence of conditions in the market from a economic perspective, being surprisingly, supportive or creating opportunities for investors to engage now with the changes in work, the changes in the workplace, that brought on by COVID, then trends accelerated by COVID and by what's been happening economically and with work itself, as well as the shifts with societal issues around, things like diversity, equity, inclusion, pay equity, mental wellness focus. All of these things and more have, created this environment where work tech, HR tech is in the center of investors' focus, in the center of corporate funds. So it's a very interesting time to be in HR tech. If you saw the video interview that I did regarding Acadian's new seed fund, we talk about how this might be the best time to be in HR tech, but we've said that every year for the last few years. So it's an exciting time. A little bit before I move on from this slide, it sort of speaks for itself, but WorkTech, why WorkTech and not HR tech? You'll see I use the terms interchangeably more out of a messaging thing than, but the market, couple of things here. The market has really moved from a technology perspective beyond the sort of core categories that we've always tracked. While those are still relevant, HCM, talent management, talent acquisition are still relevant. The subcategories, the 20 or 30 subcategories that I look at within those major categories are sort of falling on, onto each other, right? So of course we've got platforms that try to be everything to everyone from end to end, but we've also got sort of hybrid solutions that are merging, learning with talent acquisition, learning with talent sourcing, learning and career pathing with to look at internal mobility. We've got, benefits and employee experience morphing into wellness. So and it's all being moved into the flow of work. So, and as the profession has evolved as well, the HR world is redefining itself, has always been on a quest to be more strategic, and all of those issues that are driving the market are now driving that change in HR and the change in the category. So that's led me to WorkTech, and led as the category has moved in that direction as well. So that's that. I won't get into any more of that. Global landscape looks much as it does every quarter. There were was it 53 deals in the U.S., which is a lot of deals, but 91 again around the globe. The U.S. is always leading. The UK and or France or are number two lately, perennially UK. And then it's a smattering of countries across the globe. I'll say it again and again. I don't look at a quarter and consider that a trend when it comes to this topic, but it is very consistent when we look at things annually or over the last few years that we've been tracking. So, looking at some trends in the market that people are talking about outside of HR tech, there's this, is there an exodus from Silicon Valley to, depending on what category you're in, Texas or Miami, right? That's the in the zeitgeist these days. The HR tech market, work tech market has always been a little bit different because the different industries that are supported, the different markets that are supported, whether it's from a staffing or a benefits perspective, have build sort of ecosystems around where there's a density of employers, and a lot of startups, a lot of tech solutions emerge related to those industries, and then go more domestically in the US, national or global. Still, Silicon Valley's sort of the home of innovation, around technology. The world is flatter. It's a more global conversation these days, just as work itself is becoming more distributed, and teams everywhere, including within startups, are becoming more distributed. HR has always been, I think, a little bit of a outlier in a lot of the companies that I've talked to over 20 years. Will be certainly a good percentage in Silicon Valley, but around the globe. And I don't see an exodus here in our numbers. I see very consistent, sort of plotting with what we've seen. And that includes the emerging, sort of seed level startups. So that's the global picture. Market opportunity. I went through this last quarter as well. New numbers on the TAM and SAM side of things. We use PEPM and annual contract values, along with the government data from obviously the countries that are reflected here. We'll be extending this, but there's a massive opportunity, especially as service providers are now being displaced by technology, and or acquiring technology, becoming more technology first providers, especially in areas that were outsourcing related, staffing, core HR, payroll, etc. That's been accelerating, and it's been shifting. If you think about advertising, the emergence of programmatic, we've only got about a 15 or 20% adoption rate in recruiting ads, but and there's nothing but growth there, and that will be displacing not just other technologies, but service providers in the agency landscape that are now, we've seen, acquisitions there, and those agencies are becoming more technology forward. So just as an example, and we can extrapolate that across other categories. So massive opportunity, about 380 billion. And of course, the US is the largest market for this category. This data is broken down by subcategories, and if we're having an advisory call, if we've had one, we've probably dug into this a little bit, but happy to, I share the details for the Insights members and advisory engagements if you're in one of those. So let's get back to VC. So we've got this crazy, results in Q1. We've got this amazing market opportunity. We've got conditions for not all categories, not all vendors in HR tech, but many that were created silver linings through the pandemic, and growth, or at least stability, which was silver lining for many this past year. And so how did it shake out? Well, through this whole pandemic, if you go back to the 2020 look back, HCM, the balance between HCM and more, sort of infrastructure, operations oriented, experience oriented HR and recruiting, that would normally be a balance and sort of ongoing, that changed. If there was the tapping of the brakes that I expected to happen into Q3 last year never happened across the board. If it happened anywhere, it happened in talent acquisition. Now, when we get into the deals this quarter, it has, I'm not going to say it's back, but it's started to emerge. The category, the subcategory that drove talent acquisition classically, and it's still over the last 5 years, the top category by far in HR tech is the job board marketplaces. That was non-existent for a while, and it's back. That is back and starting to emerge again. All of the economic signals that would tend to that point to growth and job growth and filling jobs getting harder, the need for more innovative solutions, they're all there. And I expect that category, I expect to see that coming back and things to balance out. I think the pie will get larger. We won't be slicing the pie differently. I think I'm looking at a climate where I'm seeing a lot of funds, as I talk to investors, that are a lot of investors interested in this space, and a lot of funds interested in this space, funds being created to focus on this space. So, that's my view. And you can see that the deal numbers is also, it's also different. We're used to seeing a very low average deal size in talent acquisition because a lot of seed and early stage fundings across a lot of point solutions with a high average deal size, lower volume of deals. And now we're seeing more deals with a larger average deal size, almost double than talent acquisition. And, talent management has been on the increase, but very consistently, like number 3 last quarter, they were number 2. Again, a quarter does not a trend make, but this is the landscape that we're here to talk about. Okay, keeping us on time. This picture, looking at the, I say categories, but again, the subcategories, these are this is where you can see the marketplace job boards, started to come back. It was, a couple of big deals in that space, happened to be with one vendor, Job and Talent out of Spain, which is a marketplace that doesn't just provide hourly jobs and matching, but a level of support for both employers and the workforce that goes deeper into the value add for things like pay and whatnot. So it's an interesting model, and I expect to see more of that. And we are seeing more of that globally. But that's what, for the large, that's 316 million in one quarter across two deals. They did like there's Series C and D in Q1, so that's the lion's share of what we saw in talent acquisition. In core HR, the last couple of quarters, we've seen, payrolls cool again. It's I think we're in another cycle where we're innovating the model for pay. So things like on-demand pay. We're looking at evolution of technology so that companies like Amitis that do global payroll, but they don't actually execute payroll. They sort of layer across a large enterprise global infrastructure, are becoming this incredible source of data and analytics, not just for payroll, but for the workforce at large, and also providing insights into not just full-time employees, but contract, temp, freelancer data, just a level of insight that we've always said it's surprising how little visibility enterprises have into their workforce from just a basic perspective, like pay classes. And these tools are now sort of built on more modern technology and providing better insights, supporting the emerging, remote work, distributed work, tax and compliance implications, as well as a better interface, higher adoption rates, and the ability to tie into a talent-driven organization. So I'm beyond Amitis and into the Personios and so forth. Paycor was a large deal there as well, and that's more of a I say a lens into how substantial the SMB and the middle market is as an opportunity. They've done very well and aren't really showing up as a major competitor for the Paychecks or the ADPs of the world or the Ceridians of the world. So it's a huge market segment with a lot of opportunity and a lot of legacy technology and room for integration. Wellness, mental health and mental wellness was the big has been the big story through one of the big stories from a shift in focus. What I'm hearing from through this pandemic, what I'm hearing from vendors on the in the space was pre-pandemic, while there was some growth in that category and some traction these vendors were able to achieve. Getting to senior executives and being able to build a business case for the impact of mental wellness on the organization was very difficult. Now their inbound lead flow is overwhelming, right? So the CEOs currently have mental wellness and mental health of their workforce on their list, and HR is being tapped on the shoulder to drive whether it's a benefits offering or whether it's viewed as an employee experience offering or both, whether it's a content and learning, whether it's EAP type support function, or whether it is a sort of access to clinicians, therapists, counselors, or all of the above. HR is being tapped on the shoulder to drive that, and it's certainly investors sense that and have put some, made some big moves. Three of the four of the 7 unicorns that were minted by VC in Q1 were in this space. BetterUp, Ginger, Modern Health. It was three. BetterUp, Ginger, and Modern Health. 3 of the 7. Excuse me. So does that category, there were other vendors in the space as well that saw investment, other vendors who exist there already. Does the category support it? We'll see. We'll find out in the next couple of years. And we saw a lot of movement in benefits, in safety, and again, wellness across the board. The interesting thing about safety, I think it's a direct response, both any traction we're seeing in the market on those products and capabilities related to HR, workforce planning, return to the office. It's obviously a direct response to the pandemic. So the agility here, right? If you think about the speed in which things have shifted, and if investors are nothing, they're agile. So that's been interesting to see on a quarter-to-quarter basis how quickly things have shifted into these categories. And the first couple of quarters, you expect that most of these deals were in process, as they will be anywhere from 6 to 12, 18 months. But to see it sustained through this past year and now looking into Q2 to see it's just really, there really was a new calculus that investors brought to the table. Let's look at and comparing. If we think about, here are the subcategories we saw in the quarter. Again, a quarter does not a trend make, but it's fairly consistent with what we saw through the year last year. Collaboration and communications is obviously an area with the accelerated trends around distributed and remote work, learning, wellness. You see, job boards would normally be on the top of this list. That's probably the biggest change. But you see a lot of consistency with what we saw. And this is again through 2020. It doesn't factor in Q1 2021. Let me see if I've got no questions yet, that's good. It'll keep me on time. So I promised in setting this up that we would get, we always talk about sort of what we saw in the quarter and the big trends, the biggest deals, the biggest categories. But I dug in a little deeper and wanted to talk about a few of the emerging trends, or where I'm seeing a little momentum that I'm not giving any financial advice, but these are some things that jumped out at me, I guess, to dig in on a little bit if you're as we're looking at the market. So I've been really disappointed in the lack of funding in diversity, equity, and inclusion, given the amount of focus that has existed there for quite some time, pre-pandemic. But looking at again that calculus, where was so much agility demonstrated by investors to move, looking at communications, learning, mental wellness, given the onus and really the buyers, the HR leaders, the ESG leaders and enterprise are engaging in this space. It was just based on what I'm tracking. Last year we saw 9 million. In Q1, that uptick to 50 million. Multiverse is a marketplace job board, and Canaries is in the data branding, employer branding space. So they're looking at providing job seekers data to help them, sort of like, I don't want to call them Glassdoor, they're not doing ratings, but in the same way a job seeker would get a sense of a culture, or try to get a sense of what it's like to work somewhere. This is the data that Canaries provides. It's an interesting play, and they've got a few sort of prongs to their offering. So it's not a one-dimensional solution, which we see a lot in DE&I. We see a lot of job description tools and a workflow tool, or, very point solution type. And we're starting to see, the marketplaces and the canaries type. I wouldn't call it a platform, but um, a multifunctional, best of breed, if you will. But I still, this is, I think there's opportunity here, and I think there's a lot happening. And it's an area where I'm certainly seeing entrepreneurs putting some focus. There's another angle here, which is that, this is a systemic problem, and that the platforms and so many of the vendors are applying effort in these areas. But I think that's while that certainly resonates with me, and it's true. It is not what the buyer behavior demonstrates. I think of course the platforms need to do a better job mitigating bias and things like this. But we need better sources of talent. We need better data. We need better insights. We need better decision-making support. We need better training tools. And there's a lot of room in this category for that. So I'll get off that soapbox. Another category, which is I'm starting to see some really interesting things bubble up, is in the independent workforce, AKA contingent workforce. So not the gig economy, not transactional work, but the freelancers, contractors, temporary employees, and solopreneurs. So, we hit some milestones in 2020. I just did a podcast on this, so I'm like armed up with stats. But back in 2013, when I first started tracking this and covering it, we talked about the workforce shifting by 2020 to 50% contract, or contingent was the term that we used then. And we just got to a place where about 50% of the adult workforce is or has worked as an independent worker. Now, that's a slightly different stat, but that's projected by 2025 to go to over 50%, about 54, 55%. And these stats are from MBO Partners, which has been tracking this stuff for about 10 years. Now, the other thing that I'm seeing in the market is that employers generally have, if they don't have any idea about the demographics of their workforce via their payroll data, the part of their workforce they know the least about is the contract employment. So it's used by both the SMB and large enterprise. So Paychex did a look at the SMB just pre-pandemic, and year over year, contract employee utilization by SMB was growing at 11% year over year for a couple of years. That surprises most people, because we don't expect to see that. And then in the enterprise, we've got a lot of this is managed by procurement, so sort of off the radar. When it is managed internally through HR, it's just a pay class. And then there's a lot of this that's off the radar that's done on a manager's desk. It's done, I need a writer, I need an accountant, I need a fractional CFO for some period of time, I need a developer, I need someone to work the cash register. So a lot of this gets expensed in a way that doesn't show up. So I believe we probably have exceeded that 50% number. And more importantly, this is an area that we have made little accommodation for the actual management of this. When you think about these individuals are not, in the case where they're coming through a staffing firm, or where they're coming, in some other model, they're not a direct part of the team. So as I look at things like pay equity, and I look at things like just equity across the board, when I look at culture and so forth, managing my team, incentivizing my team, motivating my team, when 50% of it is contractually not part of the workforce, what are the levers that I can pull there? And what sort of how do I manage that type of hybrid workforce? There's a lot coming out now that gets at both from a hiring perspective, because we're not bifurcating or compartmentalizing these worlds anymore. So a lot of interesting stuff that needs to happen quickly in order to support this. And in this economic climate, as we're coming back, employers always hedge their bets for a while with this independent workforce. So we'll see a spike in utilization and probably some success for tools like the Serenums and Contests. Contest is supporting the freelancers themselves. Serenum is more of a workforce management tool. And we're seeing some really interesting models across the board. So that's a spot that I'm keeping my eye on, and I expect to see some interesting things. I talk about this all the time. There's the best thing that an employer can do, or employers can do, to build a better talent pipeline would be to invest in creating the talent pool, like literally creating it with learning. And that's a space that we've quarter over quarter seen some interesting models. This quarter it was Careerist and Next Step, where learning meets talent acquisition. We're seeing models like, getting a university education that is, paid for over time with a percentage of your salary. That's not the model most people get excited about, but we're seeing other models with certifications, skill certifications, where healthcare organizations are paying for those certifications. That creates a talent pool, that creates sort of a pond to fish in. That's a smaller pond with more qualified fish, if you will. We're seeing sales certifications, seeing the maker school, the make school or maker school in the Valley that is funded by like Apple, Google, Microsoft, and the internships and curriculum is influenced by them as well. So that's they're creating and investing in the talent pool that they'll then pull in on board. Digital adoption, I'm going to run out of time here, so I'm going to move quickly, and I'm pretty much on time, but digital adoption is another space where outside of HR technology, outside of WorkTech, we see the WalkMe's and others, thriving. And what's happening now, Speckit is a new tool that's a little more focused from a WorkTech and collaboration perspective. But I think this is another place where learning is going to be more present in the flow of work, in the sense that it's providing not just content to learn, but context sensitive content that's sort of overlaying my user experience and the digital employee experience, and also providing me, not just guidance, but providing automation, providing, low code, no code type automation and workflows to get the job done. So I need to do a performance review. The digital adoption platform doesn't just tell me, well, here's how you need to prepare, but when I, click the box, it, fires the calendar invitations and the documents and pulls the data that I need to prepare and builds the first couple of charts or whatnot. That's fairly rudimentary stuff, but that's the kind of experience that we're starting to see possible and demonstrated within and outside of HR tech by companies like WalkMe. And I think we're going to see more specialized and focused digital adoption players like Speckit emerge in this category. The other two things where I don't have sort of underscore, right? Workforce management and thinking about the merge of the contingent and the full-time workforce, the thinking about the impact that COVID is having on the workforce, thinking about remote work, distributed work, everything from time clocking to shift scheduling to getting into performance-driven scheduling is really interesting to me and ripe for some disruption. And then the job board hybrids. So how can we support talent, and how can we extend into the talent life cycle from the source. So Serenum is an example of that. It's a more workforce management driven, coming out of the staffing world solution, and I think we're going to see more and more of that. So it's just a few emerging things. The 25 largest deals, you've got access to that in the report. Of course, I've got all 91, and I'm happy with the data access part members and the insights members to provide a more, any view of this that you're interested in. And again, updates are coming to the database itself, looking at shifting possibly from Power BI or augmenting that with some stuff there. What happened to all of the tracking? So looking at 2017 to date, now over $18 billion, over 1,000 deals tracked in that database. And here's how that looks category to looking at category and deal size. You can see, as I was referencing earlier, HCM is always a leading category. It has jumped. Talent acquisition will come back. It'll catch up a little bit, but I think the pie will get bigger, not just sliced differently. You can see the deal volume in talent acquisition, how that this looks like a more normal view as to what the deal volume looks like. If anything tells a story about how big Q1 was for WorkTech, it's this. As I said earlier, it was quite a year. Because 2021 represents one quarter, and the way we look at WorkTech, because there are a lot of numbers out there. I used to be the only one tracking this stuff so closely. Now there are a few players out there doing it, and what I find is that I talk to them and engage with how they're doing it, they're looking at a more broad B2B category. So, for example, a good example would be, I don't take every low code, no code workflow play and put it in WorkTech. While technically it's used at work and it's workflow used by employees, I only include those that have a focused employee experience or work related offering or minimally positioning. So if I were to include them, I'd be up closer to like a $5 billion number. And there are other examples of that. And that's how this is a lens for, this is an HR, a future work focus. I'm not looking to puff up the numbers to make HR tech look more advantageous. So you can get, the sort of methodology behind it's all tracked. You do or don't have access to the database. You do if you're on this live. You don't if you're watching it on demand. And feel free to check out the memberships. And remember HR Tech Book. Again, you'll see some announcements this quarter about how this data from hrtechbook.com directory of hundreds of HR tech providers will start to merge and become something accessed at WorkTech, but we've always been behind HR Tech Book. And that's all I have for you today. I don't have time. I've got like 2 questions. Don't have time. I will follow up with you directly. Thank you for being here. Thank you for your time. I really appreciate your membership and your support, and look forward to hearing from most, if not all of you, in the near future. Thanks.